Today we are going to discuss vertical mode of presentation of profit and loss account and balance sheet. First of all, we are going to discuss about the profit and loss account. So why it is required? Generally, we see that horizontal mode of presentation for balance sheet and profit and loss account, and which is called T4, like this. For balance sheet, assets are this side and capital and liabilities are this sides. For profit and loss account, the revenue this sides and all the expenses are this sides. This is called T4. But today we are going to discuss the vertical mode. Why it is required? Actually, the financial experts, those who analyze the financial statements, they have said it is better to present the data in this mode, vertical mode, so that generally the analysis are made for 5 years, 8 years, 10 years, even sometimes 15 years also. And in that case, if you place the data side by side, column wise, then it will be helpful for analysis, comparison, interpretation, to see the trend analysis, and that is the purpose. For that reason, this type of format, vertical presentations, are generally used by financial analyst, management accountant, cost accountant, like that. Okay, now I'm going to discuss in brief what is the structure and what are the main items which will be used. Actually, my purpose is in my next video, I am going to discuss the health analysis of a business or industry through ratio analysis. In that case, we will use the presentation of data in this format, and it will be easy and better to interpret presentation, to see the trend analysis like that, which I have already mentioned. Okay, now I am going to discuss in brief the structure of profit and loss account in vertical mode. First, see sales. Sales basically are two types: cash sales and credit sales. You can sell direct cash and you can sell through credit also. That's why these two positions are given, and this is the gross sales. After adding this, you will get the gross sales. And it is very common. Some portion of the sales are returned back due to various reasons. That means sales return. And from the gross sales, if you subtract the sales return, then you will get the net sales. And this figure is very important for analysis. I will show you that when we calculate the gross profit ratio, net profit ratio. In that case, it will be a stock turnover ratio, sales figure will be used. So how sales figure is presented here? Cash sales plus credit sales is the gross sales, less sales return is the net sales. The next item, that is cost of goods sold. It is very important. Cost of goods sold. How we determine it? I will mention in your format. First, write the opening stock. The stock at the beginning in your go down factor, like that. I am not going to discuss in detail. That will be discussed separately. Add purchases during the period. If you are considering for 1 year, that means the purchases during 1 year, including, this includes freight or carriage inward, means the fare required to bring the materials to your factory site or go down, that is also to be included with the purchase. And some incidental expenses also. If any incidental expenses are required, say octroi. Octroi is a local tax which is taken by municipality. When the materials are bringing inside the municipal area, they will charge it. It is also to be included with the purchase of materials because it directly relates to the materials of purchase. That is the purchases figures. And also add with this the manufacturing expenses. Manufacturing expenses means which expenses? Which are directly related to the production. You can identify with the product. That is to be included here. But it is in expenses nature. Say direct labor or direct wages, you can say. Power, fuel, if it is directly being used for production, it relates to manufacturing expenses. I am not going in detail here. After clubbing this, you will get this figure, total figure. Total cost of production, and from this less closing stock. Then you will get, this is the figure which is called cost of goods sold. Cost of goods sold means that cost which is directly related to the sold items, which you will not get back again. You have sold it. So you have got the revenue or sales, net sales this, and to bring this sales, this cost have gone out. That means this sold product have brought this revenue or sales. Now, if you subtract from this sales figure, net sales figures, this cost of goods sold, the difference is called gross profit. This is called gross profit. Here it is written A minus B. A means the net sales, B means the cost of goods sold. The cost incurred which you have sold, directly related to the product, not indirect cost. No indirect cost will come here. You can identify this cost with the product, like direct material, direct labor, if any power, fuel which are used, like that. Okay, now next one. We're coming to the operating expenses. This consists of two types of costs, mainly office and administrative expenses, selling and distribution expenses. These are indirect costs. It is not visible in the product, but without this, it is not possible to run the business industry like that. Office expenses, say, salaries for the staff working in the office. Without the staff, it is not possible to run the production or industry or business. But salaries are not visible in the product. It is indirect. The staffs are working in the office, but wages are directly related to the production because they directly involved to the production. So here we are taking all the indirect expenses. Administrative expenses. There are so many administrative expenses. All are indirect expenses which cannot be visible in the product. But without that, it is not possible to run the business or industry. Rent, say, legal expenses, director's fees, electricity. Electricity means for lighting or heating of the factory offices. Electricity, telephone charges, all will come under administrative expenses. Here I have just mentioned the total item, not in detail. It will be shown later on. Okay. That means office and administrative expenses. And the next item is selling and distribution expenses. That is directly related to sell the product and distribution of the product to get the revenue or earning. So if you club this, then the total is called operating expenses. That will also be used in future to show the operational efficiency. For that reason, the data are placed in this way. समझ गया ना? So the basic purpose to segregate the cost is to analyze the annual account, profit and loss account, balance sheet for specific purposes. That's why the data are kept systematically in vertical form. Now, if we subtract the operating expenses from gross profit, what you will get? Then you will get the operating profit. It is called operating profit, and it is calculated subtract D from C. That means you subtract the operating expenses from the gross profit. The another name of this is EBIT. Sometimes you will see it is written in the form of EBIT. EBIT. It is a very popular term. Earning before interest and tax and operating profit. Both are same. You see earning before interest and tax. That means this is the earning after which you have to pay two type of expenses. One is interest and another is tax. Next, interest. The company or business has to pay interest for different borrowings. It may be long-term loans, it may be debentures, it may be fixed deposit form which have taken from outsiders. For that you have to pay, or the business has to pay interest. That is also one type of expenses. it is to be subtracted, only then you will get the profit before tax. Then you can say, बोल सकते हो भाई why interest is not clubbed with this. The main purpose is you have to identify the earnings from which expenses clearly. What is the role of that expenses? Interest has also a vital role. That's why it has segregated. कोई कंपनी का मालिक बहुत रिच है, then he has not required to take loan, तो उनका इंटरेस्ट कम है. But operational efficiency will be reflected from this part. If you club that part, then it cannot be identified. That's why interest portion is segregated. So after subtracting the interest, the residual amount, the difference is called profit before tax. ये जो बच रहा है, after that you have to pay the tax, income tax. You have to pay the tax. That's why it is called profit before tax. This is the last part of the expenses required for any industry or business. Now age less tax. The tax amount will be reflected here, and if you subtract tax from this, then you will get net profit. Our main purpose to get the net profit, and how it has come, that I have shown here in detail. Net profit is sometimes called as earning after tax. That's why EAT. After this is all about the presentation of profit and loss account. I have mentioned here in brief. It can be shown in detail. Later I will try to show it in detail. Higher detail, cost of goods sold in detail, office expenses and administrative expenses in details. All that can also be shown. What are the items? Even interest, what are the items? It can be shown separately. So this is the vertical presentation of profit and loss account. Next, I am going to show you the vertical presentation of balance sheet also. I have already mentioned that in general, as per company laws, the balance sheet and profit and loss account are shown in the T form. But for the better use and information, management accountant, financial expert use vertical mode of final accounts, that is profit and loss account, balance sheets, etc. My next part, I am going to show you the vertical mode of balance sheet. I have already discussed the vertical form of profit and loss account. Now I am going to discuss the vertical form of balance sheet. हम लोग जो नॉर्मली बैलेंस शीट देखते हैं वो जो है इस तरह का होता है, टी फॉर्म या हॉरिजॉन्टल टाइप यू कैन से, एंड दिस इज vertical type which I am going to discuss. In horizontal type, this is asset side and left side capital and liability side. But in the vertical mode, we present in a vertical way. क्यों ऐसा करते हैं? एक बार मैं ऑलरेडी बता दिया in my previous slide. मैनेजमेंट अकाउंटेंट, चार्टर अकाउंटेंट, फाइनेंशियल एक्सपर्ट्स जब बैलेंस शीट प्रॉफिट एंड लॉस अकाउंट को एनालिसिस करते हैं टू नो द हेल्थ ऑफ द बिजनेस, टू फाइंड आउट द प्रॉब्लम ऑफ द बिजनेस, टू सजेस्ट समथिंग हाउ द बिजनेस कैन बी इम्प्रूव्ड. So for that purpose, generally study is done for say 5 years, 10 years, figures, 15 years. Agar if you place the data in horizontally in this mode, then it will be difficult to analyze. For that reason, तो फाइनेंशियल एक्सपर्ट्स और एनालिस्ट क्या करते हैं कि वर्टिकल मोड में सारा डाटा को प्रेजेंट करते हैं. पहले साइड बाय साइड लिखते हैं, कॉलम वाइज, इन दिस वे, से 86 फिगर्स, 89, it is 87, 88, 89, in this way. And it will be easy to compare the data year after year. Sometimes trend analysis is also done, which is easy by this method. इसी कारण से जो है we generally do this vertical presentation of data. Now see how it is presented. First item is, this is share capital. You write here share capital. It may be ordinary shares, preference shares, whatever be the total share capital will be written here. Add with this the figure reserve and surplus. This may be the internal surplus. It may be general reserve, capital reserve, whatever it be, right here. And this is the total of this. And from this total, subtract the fictitious assets. The fictitious assets क्या है? Which are the items will come under fictitious assets? By name, though they're assets, but actually they are not assets. Their physical presence is not there. Which are the items? Profit and loss account, debit balance, preliminary pre-operative expenses, advertisement cost, advertisement expenses initially capitalized, and discount on issue of shares. Few items have been given here just to get the idea. As they are not serve the purpose of assets, that's why it is called fictitious assets, and it should be subtracted to get the real shareholders fund or net worth of the business, net worth. With this figure, add long-term liabilities. Long-term liabilities means what? That means long-term loans which are taken by the company or business. Long-term loan taken from banks, financial institutions, debentures, and sometimes savings taken from outsiders or publics. It may be long-term also, say 5 years, 8 years, like that. And if you add, then you will get the total capital employed figure. This is the total amount of capital employed. Actually, this is the total of the left side, capital and liabilities side. Okay. Now, this figure will be represented by these sides. I am not taking the current liabilities, that will be considered separately here, but I will discuss. This figure represented by fixed assets less depreciation. Fixed assets means land, building, plant and machineries, tools and implements, electricals, furnitures. All these will come under fixed assets, and subtract depreciation from the assets value, and this is the net assets value. Now add working capital. Working capital means what? The running capital, which are required for day-to-day operations of the business. How it is computed? Current assets minus current liabilities. Current assets means what? Current assets means that assets which can be converted into cash within very short period of time, within maximum 1 year. Similarly, current liabilities are liabilities which is required to be paid within very short span of time, maximum 1 year. What are the items will come under current assets? Under current assets, the items will come raw materials, work in progress, finished goods, sundry debtors, bills receivables, cash bank balances, cash balance or bank balances, prepaid expenses, all these. I've just mentioned a few items. There are so many other items also. Which are the items will come under current liabilities? Bills payable, sundry creditors, bank overdraft, accrued liabilities, outstanding liabilities, all this. And this is the vertical mode of presentation of balance sheet, and this total figure will be same as this. I want to mention again that I have told this is the total of these sides. Actually, not like that. I have not considered here the current liabilities. In the vertical mode, it is slightly different. With the assets figure, we have to add as working capital, because all these figures will be used for the analysis of financial statements that I will discuss in my next video. And working capital will be current assets, this size, and less current liabilities. Just rectify it Initially, I told you this is the total figure. Actually, this is not the total figure. These figures less current liabilities. Actually, in vertical mode, the working capital is shown where the current liability is subtracted from current assets in this way. Okay, that correction, please do the correction. And this is all about the vertical presentation of balance sheet. Again, I want to discuss ऐसा क्यों करते हैं, why it is required. जब एक तरह का बैलेंस शीट पब्लिश हम लोग करते हैं, then again why you are changing in this way. I have already discussed, but again I am repeating. In my next video, I will show the health analysis of any business or industry through ratio analysis of the balance sheet and profit and loss account. And in that case, before doing analysis, before starting analysis, you have to present all the data in this mode, so that year after year, you can present the data side by side in column form for easy comparison, and also to show the trends of the financial changes. That is the purpose that we will discuss in my next video, and which will be on ratio analysis for analysis of the health of any business. Thank you.